Welcome to this week's edition of Trade the Trend. I'm Jason McIntosh. It is Friday, the 22nd October 2021. Trade the Trend, well, it is a weekly video discussing the latest trends and opportunities in the stock markets. And as always, this is general advice and not specifically tailored to you. All right, well, with that said, let's jump over to the first chart. SP500. Oh, and by the way, I'm going to go through some gold stocks and gold in general at the end of this video, so make sure you stick around for that. Okay, S&P 500. Well, geez, it hasn't been an interesting 3 weeks. So 3 weeks ago, the market was sitting right around here, and it looked like it was on the verge of breaking lower. There was a whole lot of fear in the market. And I heard of a lot of people that were selling their portfolios, they were going to cash, they were buying inverse ETFs to protect their portfolios on the downside. It was, there was a time of a lot of concern. People were talking about, is this another crash? Is another crash about to happen? And I think the importance of looking back and reflecting on this now the markets are back near new all-time highs is that it's just so important to keep a cool head when the market does pull back, and it's important to understand the possibilities and to stick to your plan, stick to your trading plan. And look, yes, big down moves do happen. Every year or two, we'll see the market fall 10%, 10, 15%. Every few years, you might get a 20% pullback, and every decade, we might see a pullback of, like a bear market of 30% plus. Those times do happen. But if you want to trade these big medium-term opportunities that the market continually throws at us, you need to be able to see off these bouts of volatility that will take place year in, year out, like we've seen. So, look, having said that, let's I want to just start by focusing in on this area we were looking at last week. This area in here. So to do that, I'm going to jump over to an hourly chart, because you get much better detail on an hourly than you do on a daily. So let's just jump there now. Right. Okay. S&P hourly. So this is the pattern we were looking at last week. It was a big head and shoulders pattern. So I'm just going to redraw it on the chart. It's just interesting to reflect back on this pattern and see how it's all played out. So I'm drawing in the shoulders there, either side of this part here, which is the head of the move. And look, so this pretty much played out to a textbook head and shoulders pattern. We had this breakout around last Friday, and the market really hasn't looked back. Had some sort of a minor return move there. You could barely even call it a return move. It's been pretty much one-way traffic all the way back up, and there were two clues that the market was on the verge of a potential turnaround. First was down here a couple of weeks back, where each time the market tried to test lower, it couldn't break the previous low. So that was the first clue that the bears were losing their energy in the way that they were able to push the market lower. And a couple of weeks ago, I talked about how I covered my hedge. I had a short position through an inverse ETF. I covered it somewhere around here due to this very price action where the market was just struggling to go lower. That was the first clue. Second clue came in this decline here, how it couldn't follow through, it couldn't come back to retest this low. And that, of course, is what put this head and shoulders formation into play. This is the neckline. Once we got the breakout above there, that put the whole thing into action, and the market shot higher. And I think like a big tailwind for this move has been covering of a record position in inverse ETF buying. So last week I showed a graph which showed it was a record position. I think it was saying like 1.75% of the market was held in inverse ETF. And what happens when the market gets so one-sided in its thinking and its fear of these big declines kicking through? you often get the market lurch back in the other direction. And that's what's happened. And that's been, I think, probably like much of the tailwind for this move. So let's jump back over to the daily chart. And what we want to have a look at here, I'm just going to clean that up a touch. Let's expand that out a bit. So let's have a look at the at this resistance point that the market has also managed to punch through. It's round about there. So it comes in at 44.60 to 44.80 thereabouts. So this was going to be an important level to look at to see whether the market got to this and then paused, pulled back, but there hasn't been a pullback at all. It's gone straight through, which is I think that's a particularly encouraging sign. So the bulls very much remain in control at this point. I think the next test for this market is going to be what happens when it pulls back. So it hasn't started to pull back yet. We don't know when or where that's going to occur. But just for example, let's say it were to pull back somewhere where it is now. So let's just put the Fibonacci's on. So if we were to get some sort of a pullback, you'd really want to see it holding somewhere around this support to probably the upper level of the Fibonacci's to really keep it looking quite robust. I'd be looking for something like if over a couple of weeks, maybe even a week, did that, then that really sets the stage for being able to do another punch higher. That's the sort of price action we want to be looking for now to see that this isn't just a quick short covering rally higher and then it rolls back over again. So that always remains a possibility. Always important to understand your possibilities. So this is a price action we probably want to start to see develop over the next week or two. All right, so that done. Let's jump to the NADAQ, which has been interesting as well. So what's interesting with the NADAQ is you can see here the NADAQ is yet to make a new high. The Dow Jones has, the SP 500 has, the NADAQ hasn't. Now, what's interesting about that is the NADAQ has been leading the charge pretty much for the last 18 months. And so it makes me wonder whether there's some sort of rotation going on. Financials have been particularly strong over the last little bit. So the S&P financials made a new all-time high a couple of weeks ago, and they did that amidst the volatility that we were seeing in the market. And that's a good sign. It's a good sign when the financials are strong. The Australian financials, they made a new high yesterday. So it seems to be a global theme, financials doing well. So maybe there's some rotation into financial stocks. And then on the other side, you've got stocks like Facebook, Apple, and Amazon. Well, they've still got quite a bit more work to do to get back to their previous highs. And even Google's not far from its high, but it's looking a bit sluggish in the way that it's rebounded. So maybe it's a case that some of these big mega cap tech stocks need some more time to pause and consolidate. So it's going to be interesting to see how this plays out over the next maybe the next month or two. And what we don't want to see though, we don't want to see the NADAQ stalling here and starting to pull back. What that would do if it did, you'd end up with this divergence. So we'd have a case where the S&P 500 and Dow made new highs, but the NADAQ hadn't made a new high. That's if it, like ideally we're going to see it push on over the next few days and it's going to take this divergence possibility off the table. But it's a possibility that could happen, so it's worth just having a look at it and thinking like what could that mean? So if it were to stall there and get a pullback, you can't rule out that something like this is still going to occur, and then you'd expect the S&P 500 and the Dow, they would correlate to some extent. And so this is still a possibility. We don't want to see this divergence form here. So it'll be good to see if the NADAQ can punch above that previous high over the next few days. So this isn't the preferred case by any stretch, but it's always important to be aware of the possibilities and not be blindsided when something you didn't entertain as a possibility actually ends up occurring. So, oh look, and by the way, if you're getting some value from this video, please click that like button. Let YouTube know that you like it, and also click the subscribe button with the bell icon if you haven't already done so, and help me build up this this YouTube channel. That would be that'd be fantastic if you could do that, please. Now, okay, next one, we're going to jump to the Australian market, which is also really interesting to have a look at. I've already drawn the resistance band on this chart. So this is interesting in that it's not as strong as we're seeing in the S&P and the Dow. It's it's lagging behind, a bit like the NADAQ currently is at the moment, but it's also a bit behind where the NADAQ is. So it has been a good rebound off the lows, but we really need to see the market punch through this resistant band, which is somewhere around, say, 7,700 to 7,740. We need to see it punch through there to clear a path for a retest of the highs. And if we can do that, well, look, the market will be looking quite solid at that point. The concern is if we can't punch through this level and we start getting a pullback, then it's going to be really important to watch, okay, what happens then? Is it a pullback before we get like a really good sharp punch through? That's positive. If it's then a pretty sluggish sort of rebound like this, well, then we start to wonder, well, okay, is the next move actually going to be down to here? A little bit like what we were looking at the NADAQ. So these sort of bearish scenarios do still remain on the table, and they're things that we need to need to be aware of. Not base cases, but possibilities. So if this were to happen, I don't think this would still don't think that would be the case of then we start looking for a big bear market decline or anything. I think it would just mean it's that the consolidation would then stretch out over a longer period before we then start to potentially look for higher levels. Okay, so now I want to jump over now and have a look at gold, because gold is probably one of the markets where I get the most questions about. There's always been, as long as I've been in the market, there's been a fascination with gold, and so let me just find the gold chart. Okay, so here's the gold chart. So let's just tighten it up. Yeah, there we go. Now let's just drawing a pattern which I'm having a look at the moment. It's a triangle formation. It's this tightening band through here, which the market's been in since March. Look, I don't think this is the greatest triangle of all time. The proportions don't look or feel quite right to me, but nonetheless, there are some clear lines there to be aware of and to look at. And now let me just jump over, having put that in, I want to jump over to a weekly chart. Now, I think this is all looking really constructive. I think that what we're seeing through here, I think this is all a consolidation, pretty much, well, definitely of this move, and possibly even from this move as well. It wouldn't surprise me to see this extend out even further. And now here's the thing. The longer the market travels sideways here, the bigger the base, and the stronger that base is to support a move upwards. So ultimately, I think we're looking at a market that's going to do that. And if this were to go sideways for another 2, 3, 4 months, maybe even longer, maybe it's into around February, March. That's the sort of move I'm looking for, and the bigger that base is, I think the stronger that launching pad for a big move higher. And let's so that's my favored case. So let's jump back to the daily chart for gold, and I'm going to put some moving averages on. So there's the 50 and 100 day moving averages. So look, moving averages are still down at the moment. It's going to take a bit more work for gold to start to turn these averages up. So I don't think there's a hurry to start going in and buying gold positions at this stage, particularly while the market's moving sideways. It's below a trend line, it's below previous highs. I don't think there's a hurry. I just don't think there's a hurry to be getting into gold at the moment. I think gold needs more time. The moving averages need to cross. And even if a move up started now, So just look, just for example, just say the move up gets underway now. We get a punch up, then there's almost certainly going to be some sort of return move. You get some consolidation, and then you start to get a move higher. But even if you get something like that, it's still potentially out to December before it really starts to get up to into a position to really start to accelerate, because you've got to wait for things like these averages to cross and for the trend to. It's like turning the supertanker around. It takes a bit of time. I don't think we're going to see. Look, I don't think we're going to see a move like that. That's sort of like the parabolic acceleration phase you get towards an end of a move. Moves usually don't start like that. They start more lumbered and cumbersome and just gradually trying to build their momentum. That's what we need to look out for in gold. Okay, so let's jump and have a look at a few gold stocks. And remember, please hit that like button if this is helping. It tells YouTube that people are getting some value from the videos. Let's see. Let's start with Newmont. Newmont's an interesting one to start with. Look, okay, this is interesting because Newmont's the biggest gold producer in the world, and it's come right back to a support band. Nice, look, there's a nice support band in there for Newmont. Around say $52 to $54 thereabouts, and it's come back to this support and it's bounced. Encouraging. That's encouraging. Note the moving averages are still down, so again, it's not showing any need for urgency at this point. Now, I want to focus in on this point here for a moment, and to do that better, I'm going to jump to an hourly chart just to get that better detail of like the developments here. So what we have here, we've got a price channel which is formed over the last few months. We just fit that nicely. Yeah, so it's quite a nicely formed trend channel, and the market has now broken out of it. It's doing a little sideways move here. So it's got all the hallmarks of a stock that wants to sort of like break up from this pattern. That'd be an encouraging sign for the gold market generally. So it's one which is worth watching. So just coming back to the daily chart. And I think this is a potential to form a head and shoulders type bottom. So look, so if this is just, of course, just possibility of what could happen, but there's a possibility that what we see there, that could become a shoulder, and this here could become the head. Let me just get rid of that channel. Interesting to watch whether we get another shoulder form. Well, that's just how you just watch price action. Watch how price action develop, and you think, well, what could happen? Maybe we could get something like this over the next the next month or so, and then if that were to happen, and this may not happen at all, it's just like the things that you look out for, the things that could happen. You could find that we have a head and shoulders bottom in Newmont around the same sort of time that gold chart has a stronger base, and then the whole thing starts to move upwards, and this becomes like a big consolidation base in Newmont, like an 18-month, 2-year consolidation. That supports a really big move higher. That's a sort of possibility that I'm thinking about and I'm on the lookout for. Now, another couple of stocks. Kinross. Kinross is a big Canadian producer. Again, it's interesting. Like, I'm just going to get a little bit more data on this chart. So this chart, we're going back to 2016, and you'll find there's where would we put it? Like, it's not. Look, generally you'd say there is a big support band. Just trying to match it up by eye here. Like, it's hard to fit this really well, but you can see there is some sort of like, picks up these highs, high there, picks up work in there. We've overshot either side here. We're down around this point where we're bouncing. there's probably some sort of, like, you could say there's some support around that sort of area there. And I also like, there's also this zigzag ABC sort of formation that we have coming down. So look, this is it fits in with that whole Newmont pattern. It's I wonder whether you could get a declining wedge in there. Actually, I think you can. So that's another interesting pattern to keep an eye on as well. Just seeing this now. So look, this would support, like, you'd look for a move like this up to the top of the wedge, a return move, and then a breakout. That's how you'd expect that sort of pattern to play out. So you can see these bullish scenarios which are taking shape in these gold charts. But again, look at the moving averages. They haven't turned up yet. So this is all speculation about possibilities. But they're really exciting possibilities, and they're possibilities which could lead to some really profitable trends if the price action continues to play out. Okay, last stock, let's have a look at Evolution Mining, an ASX listed gold miner. Now I've already drawn a support level in here, and look, similar sort of feel to Kinross and Newmont in the case of coming back to these sort of broad areas where there's been previous congestion in the share price, previous support resistance, bounced off that. Again, we've got the zigzag. It too would probably support some sort of wedging formation, although it's a little bit steeper than the one in Kinross, not as well formed. It's look, again, showing that potential that it's been a long consolidation, but it could be forming that base for quite an exciting move higher sometime in the months ahead, maybe even into the new year. It's a developing situation which is worth paying close attention to. Okay, well, let's call that a wrap for this week. Hope you got something out of it. Please hit the like button if you haven't already. If you enjoyed it, and please maybe leave a comment if it tells YouTube you're engaging with what I'm saying. And I'll leave it on that note. I'll be back next week. Try and put all the pieces back again together next week to work out where the markets might be going. Thanks for joining in, and I will catch you next time.